Hey man, is this thing on? Okay. Hey guys, welcome back to another video. It's your boy Cam here. Today in this video, we're gonna be discussing most important price action chart patterns. So get your pen, paper, study book, whatever it is, get it out. Let's get it. If you're new to Forex trading, chart patterns are an essential tool that can help you identify potential trades. They help you to make an informed decision and increase your chances of success. Personally, I am a price action trader, meaning I take into account the different price action patterns on the markets that I'm about to mention to you, and I use them to determine my specific trade or setup. As some of you watching this video, you probably know that there are already three basic price action patterns that you need to learn as a Forex trader. That number one is reversal patterns, number two, continuation patterns, and number three, that's obviously candlestick patterns. Let's go to price action reversal pattern. Reversals are probably one of the most important set of price action patterns you really need to understand. It's very important to know what your reversal patterns are in order to see the change of the trend. Let's head on to our first reversal pattern. We've got our head and shoulders. Yes, head and shoulders. It resembles that of a left shoulder, a head, and a right shoulder. Here, take this picture of me. See the left shoulder, the head, and the right shoulder. So what this pattern does is, on an uptrend, it will create an impulse, correction, a higher high, which is the head, lower low, a lower high, and then a ultimate lower low. This pattern is by far one of the most popular in the market. So familiarize yourself with this pattern in order to get good at spotting reversals. Let's go to the next one. Let me present the inverted head and shoulders pattern. Yes, you heard right. It is the complete opposite of what we had before. As you can see with the inverted head and shoulders, this is an impulse to the downside. It then creates a left shoulder, impulses up, goes down to create a lower low, which is the head, then impulse to the upside, creates a right shoulder and invalidates the sell setup. As you can see, if I put the head and shoulders and the inverted head and shoulders side by side, if you just flip the one, it becomes the other, and if you flip the other, it becomes the one. Right, let's head to number three of the reversal patterns. Let me introduce to you the double bottom chart pattern. Now, how this pattern got its name. As you can see, it creates two lower lows. We have our bottom one and then bottom two. They are roughly in the same price zone. And they also look similar to a W formation. So it's evident with this pattern because it was on a downtrend, created a W and went all the way to the upside. So bottom one and bottom two ultimately creates a strong support zone. All right, let's go to the next reversal pattern. And yes, you guessed it right. It is the opposite of the previous one. This one is called a double top pattern. Now, with this pair, we see an impulse. It creates a higher high, goes down, creates a higher low, goes up, creates a higher high in the same area zone. Top one and top two now become a strong resistance zone. This pattern also resembles that to an M formation. So therefore, look out for your M's because those are the type of patterns that would turn the trend around. Once again, if I take the double top and the double bottom, you'll see that if I put them side by side, they resemble one another. They look exactly alike. Okay, moving on. We have our last important price action reversal pattern, and that is the rising wedge. This is ultimately by far one of the best setups I prefer. it falls and creates a wedge looking pattern with a bigger bottom and a narrow top. Now, once price exhausts, it then breaks its way down, retraces in that area, and then goes all the way, filling up the entire wedge pattern. Personally, this is a high probability setup. This setup works 80% of the time, and it is also quite easy to spot on the market. Okay, that's it for the rising wedge. Let's get to know its twin, the falling wedge. Also being one of my favorites because it is the polar opposite of what we just saw, the rising wedge. So with the falling wedge, we can clearly see that price is impulsing to the upside, creates a higher high, then goes down to create a lower low, a higher low, a lower low, a higher low, low low, so forth. Then this diagonal line, similar to an open triangle type pattern. As price breaks through at that zone, it will go all the way up and cover the wedge zone. And once again, if we put them side by side, the rising wedge and the falling wedge, we can see that they are ultimately one in the same. And this brings us to the end of our reversal patterns. The next type of pattern we are heading to is continuation patterns. First up, we have the falling wedge pattern, similar to what we just looked at. The only difference here is that this is a continuation pattern and not a reversal. As you can see, this is an uptrend. It creates the wedge and then it continues to the upside. It has all the properties of the previous chart pattern we just looked at. So that is it for the falling wedge pattern. Let's head on to its twin, the rising wedge pattern. Once again, this is similar to the pattern we just spoke about, where it's coming from the upside, creating a wedge pattern, and then falling through all the way down to the downside. And this is again personally one of the best setups to trade for me, as it has a high probable setup. That's it for the rising wedge pattern. The next pattern that I'm about to introduce to you is a bit interesting. So without any further ado, let me introduce you to the bullish flag chart pattern. As we can see by the flagpole swing, it's an impulse to the upside. It creates a correction which then has parallel lines opposite to one another, impulses to the upside to complete the bullish flag resistance zone. It then comes and retests and goes all the way back up. This one gets a bit interesting. Let's take the flagpole impulse and let's divide it in half, meaning 50%, 50%. The flag should only come halfway through, otherwise it is an invalid setup. And so next we are looking at the bearish flag. Here we're looking at a significant push to the downside. A flag looking like structure then forms and it is continued down. Both bear and bull flags are formed a lot in the market, so it's quite reliable. Here we have our last pair of continuation patterns. We have the ascending triangle. As you can see, the ascending triangle forms in the middle of an uptrend and it targets just the high of the ascending triangle. Let's go to the opposite of ascend. Descend. This descending triangle forms on a downtrend. These patterns are good to keep in mind, but if I'm being really honest, they aren't amazing for trading. So yes, we've come to the end of our video. I hope that you take in these patterns, you learn, you study them, and you'll be able to pinpoint them on the market. So do yourself a favor and use this weekend to go through this current market analysis or forecast and try and spot the different type of chart patterns. I really hope this video helped you guys. Stick around for the next one. There's going to be more educational videos to come.